Ladies and gentlemen, my name is Andrew Gilmore, and I'm the sales supervisor here at Disability Insurance Services. I want to thank everybody for joining us today. Today's topic is a real interesting one, and it's a very underserved market. The title of today's presentation is Business Overhead Expense Training. I don't know how many of you have actually ever sold a business overhead policy, but like I said, it's terribly underserved. Less than 25% of business owners have any form of disability insurance. And of that 25%, the majority of it is individual disability, the paycheck protection coverage that we always talk about. Today we're going to talk about insuring their golden goose, their business, the expenses of running their business, and we'll see the downfalls that people could potentially have if they don't do that. So let's jump right into today's presentation. Business overhead expense is a disability product that covers the expenses of running the business. But rather than calling it business overhead expense, let's call it what it really is. It's insuring cash flow. So I like to call business overhead cash flow protection or bankruptcy protection. And we're going to go into it a little bit further, but when a business owner let's say we have a business owner of a small business where he's the breadwinner, he's the guy who's making all the contracts, whether it would be a white-collar position or if we have a blue-collar client, maybe who has a storefront, he's the guy that's running the storefront, paying the employee salaries. If he were to become disabled and those contracts go away, then the business is very much prone to going into bankruptcy. And when that happens, they have to liquidate the business and you don't get their true value. So what business overhead serves is it's cash flow protection or bankruptcy protection. So let's refer to it as that. What is business overhead expense? I've gone into it a little bit, but this is the definition in a nutshell. It's the BOE insurance policy reimburses business owners for expenses that business owners may have during a period of disability. So unlike individual disability, where the insurance carrier is going to pay out a set monthly benefit each month, no questions asked as long as you're disabled, business overhead works a little bit differently. During underwriting, we're going to assess the business owner's business expenses. We'll want to have a good idea, and what we do is we'll request tax returns or financial documentation to back that up. But at time of disability, it's a reimbursement policy. So based on your expenses, you're going to have to be able to document those and send them into the carrier, and then the carrier will dole out the benefit amount. So that's a really important thing to remember. It's a reimbursement policy. Now, what are they reimbursing? Well, think about it. There are many things involved in running a business, whether it be a white-collar business or a blue-collar business. But some things to think about are employee salaries, payroll salaries. That is a key attribute to running a business. If you're disabled, you want to make sure your employees are taken care of. Taxes of any kind. Think about all the payroll taxes that a business owner has to pay, or real estate taxes if they own the building. Rent is a huge expense that if you can't come up with rent each month, you're going to go out of business. So there are a number of different expenses for a business owner to consider. I mentioned salaries, rent. If you're blue collar, it might even come down to the cars that you own. Maybe you own a plumbing business and you have your vans that you need to pay off. That stuff's covered. Electricity is covered. Employee benefits are covered. Taxes are covered. Laundry, mortgage payments. How about malpractice insurance? That would be covered. So all the things that will keep your business afloat are going to be covered under a business overhead policy. So let's talk about the structure of business overhead policies. I am a huge proponent of having a very short elimination period. From working with business owners in the past, I understand that if they don't have money coming in right after a disability were to occur, they are much more likely to go bankrupt and their business to fold. So my recommendation is to always have a short elimination period on a business overhead policy. The shortest offered is 30 days. Other elimination periods are 60 and 90. No insurance carriers can offer more than 90 days. And I would never recommend a 90-day elimination period because that business is going to go out of business immediately if they have to wait 90 days. So we need at least a 30-day elimination period. Well, I also recommend, in terms of the benefit period, 12 months. And why would you ask? You know, some agents want to do at least 2 years on a business overhead policy, but I think 12 months is what we need. 12 months will give a business owner who's disabled enough time to figure out those key questions. You know, are they going to be able to return back to work in time? The answer is 12 months will give you that leeway. Also, during that 12 months, that should give you an honest idea of who the potential buyers are out there if you're not going to return to your business. Who can I sell this business off to without going into bankruptcy? So I definitely think that the structure of a business overhead policy should be a 30-day wait and a 12-month benefit period. Other benefit periods include 18 months, a year and a half, or 2 years. They don't go past 2 years because at the 2-year point, they'll assume that you know, if you haven't returned by then, the business is not going to be running. And here's just a chart that, you know, sort of illustrates what happens, you know, in the event of a disability. You know, the front of the graph is basically, hey, we're running at a profit line. We're above our expenses. That dotted line is, hey, a disability has occurred. And as you'll see, when a disability occurs, the profits go down. For a small business, if their breadwinner is not able to go out and make the contracts, make the sales, their profit's going to go completely down. And unfortunately, the expenses go up. Think about you have to make your average expenses, but the business owner has to pay for normal things like probably like medical care and other things of that nature. So you could see how quickly someone could go into bankruptcy. And the bad news is if you go into bankruptcy, you're not going to get the true value of your business. And you know, I always like to share this story. I work with an insurance agent who is a dentist, and his expertise is to sell disability insurance to other dentists. He's a disabled dentist himself. And basically what he was explaining to me is when a dentist starts a practice, they do this, you know, for many reasons. I mean, they want to practice dentistry. It's very lucrative for them. But at the end of their careers, their practice that they've built over those years, that's their nest egg. That is something they're going to sell to a younger dentist in the hopes that they'll get enough money that it will aid them in their retirement. So take that same dentist, for example. If he goes bankrupt and does not get the true value of his business, that really puts a damper on his ability to live and his ability to retire. So it shows you how business overhead expense, if you have a policy on that, it will give you the leeway to find fair market value for your business. So let's recap again what the cash flow issues you'll see. When a business owner goes down, you're going to lose all of your earnings. If the main breadwinner isn't there anymore, you're going to lose your customers. If you can't afford employee salaries, you'll lose your employees. And when that all happens, you've lost your business entity at that point. Now, a lot of people will say, hey, why do I need business overhead expense? Shouldn't I be looking into a key person disability policy? Well, you know, key person sort of does serve the same premise that a business overhead policy does. But what it says is, you know, the insurance carrier will pay a replacement to come in and replace you so that the business doesn't falter. Well, there's a lot of issues with that. I think that it might be very difficult to locate a true replacement to take over your business. You've built that business from scratch, and it might be a common field, but no one really knows your business the way you know your business. And then number two is, where's the incentive for that person to come in and assume all the responsibilities you had? I don't think there's much incentive unless you can really offer a lot of money for someone to come in and money's going to be tight when a disability were to occur. Also, who knows? If you don't have that loyalty with somebody, who knows that they'll run the business the way that you need it to. You better have a strong relationship with someone in the same field for you to be able to find a true replacement. And then, like I had mentioned, if you're disabled, you're going to lose net income, and it's going to be very hard to come in and hire a replacement. So yeah, I think a true business overhead policy is really what small business owners should be looking at. Hey, this is a really important point about business overhead, and it's for you, the broker. And you must communicate this to your clients when you meet with them. A business overhead policy can be written off. The premiums can be written off from the start. Okay? So if the business is paying the premiums, you can write that off as a business expense. Now, let's say a disability were to occur, and you've put your receipts together, and you're paying out, the carriers are paying out a benefit. Well, individual disability tells us if you're writing off business expense, or if you're writing off the premium as an expense, the benefit's going to be taxable, right? Well, with business overhead policies, no, they aren't taxable. The carrier is going to pay out the benefits, and then you're just going to go ahead and turn around and deduct those expenses that you paid off as business expenses again. So essentially, you've deducted the premiums on the front end, and then you will not be taxed on the benefit on the back end. It's the biggest selling point for business overhead. It really is. They aren't going to be taxed on it, as well as the premium can be written off. That is something that needs to be told, or the client needs to be told on each business overhead presentation. It makes them feel more comfortable with the premiums that you're going to show. Now let's talk about the target markets. I mean, the target markets for business overhead are obviously business owners, but they're not much different than our individual disability target markets. It's the professional groups. I had already mentioned dentists, but doctors of small offices, they're very much a market. Attorneys, if an attorney is either the only attorney or one of just a couple attorneys in the office, they would definitely need an overhead policy to pay off all the rent and the employee salaries. Accountants are great markets for business overhead expense. They're the ones that are crunching numbers for business owners every day, so they have an understanding of what a business owner might have in terms of cost. But other white-collar occupations as well, like architects and engineers. I do want to mention with business overhead expenses that 10 employees, traditional carriers don't want to go past 10 employees. They feel that if you have more than 10 employees, then your business is going to be okay, at least for a small amount of time. We don't want to issue any business overhead coverage. So this is truly a small business owner product. So yeah, just simply again, this is a small business product. Individuals who own a firm, which depend on their ability to generate income, they are really the crux of people who buy business overhead expense. We depend on our owner to generate income for us. We need him to have a business overhead policy. And here's the stat that I definitely want to show you. And again, it talks about the stat that I mentioned at the beginning of today's presentation. There are close to 6 million small business owners, and only 23% of them have any form of disability. And I'll tell you that out of that 23%, another study showed that only 5% of business owners have business overhead expense policies. So it's really an untapped market. To get back to what the maximums are for a small business, say if you did have a dentist or a doctor and they did have a lot of overhead, traditional carriers usually can go up to around $50,000 worth of business overhead expense. So if you think about it, you'll have a 30-day elimination period, 12-month benefit period, up to $50,000. So it's pretty. We can get up to a pretty high amount. If you have an owner who really owns or has more overhead than that, then we can go to Lloyd's of London. They'll insure up to hundreds of thousands of dollars. And that's today's presentation. Again, I just want to hammer down the fact that business owners don't have this product. It's really an untapped resource. The premiums are tax deductible up front, and the benefits are non-taxable. They're great markets for small business owners. Small business owners, I really think, need overhead over key person. I'd encourage you to go to our website. Our website has a wealth of information, great sales ideas on there. You can request a quote, as well as get policy statuses on any paperwork you have currently in underwriting. And then you can always check for our upcoming webinars. We have recorded webinars on our website as well for you to get other sales ideas. But hey, again, I want to thank you for joining us today on this webinar. It went a little bit over, but I hope you found it helpful. Have a great day. And again, my name is Andrew Gilmore. If you have questions, call me at 800-898-9641. Thank you so much.